Okay, the last structure here is the holding company model. So the first ever venture capital firm was a holding company. It was a corporation, just like Coca-Cola. It was a corporation that had employees and assets, except its job was to go invest in other companies. And so a holding company is a permanent capital vehicle, is how we would talk about it. It exists forever, as long as it can last. It's generally very passive and very long-term focused in terms of its investing, because it doesn't have a 10-year lifetime. It doesn't have to return money back to its investors within any given time frame. It will do things that look like VC or PE or public equities. How do the investors get their money back out? Some of them are based around dividends. Some of them, like Berkshire Hathaway, and we'll talk about that in a minute, are not based around dividends. They're based totally around capital gains, about the increase in value of the company itself. And when we talk about investment company, so legally, everything I just talked about is an investment company. But this feels more like it fits the definition. This is a company whose job it is to do investing. All right, so Berkshire is the poster child for what a holding company could be and should be. And we'll dismiss what they invest in, like maybe not impactfully, but like as a structure, it's a good place to look. And so here's a diagram I grabbed off of MarketWatch. All of these companies that are on here are 100% owned by Berkshire Hathaway. So there is a company out there. It's a corporation called Geico. We've seen their ads on TV all the time. There's a company out there called Fruit of the Loom that makes underpants. We've seen them advertised sometimes. We might be wearing their product right now. We might have Duracell batteries in our device sitting next to us. Those are companies, but they only have one owner. They only have one shareholder, and that shareholder is Berkshire Hathaway. Same thing with BNSF Railroads and NetJets, and all the companies on here are 100% owned by Berkshire Hathaway. But it's not run like a conglomerate. It's not run like GE, which at its heyday had 5 or 6 multi-billion-dollar companies under the GE brand. Berkshire Hathaway simply bought these companies when they were up and running and already making money, and lets the management continue to run them, and provides capital to these companies when needed, and pretty much is hands off. What's crazy is this is one of the top 10 most valued companies in U.S. Hundreds and hundreds of billions of dollars, not quite $1 trillion yet. And the company itself, Berkshire Hathaway, the headquarters, which are in Nebraska, because that's where Warren's from, is 30 people. Everything that Berkshire Hathaway does that feels like an investment company is done with 30 people, and yet it's worth hundreds of billions of dollars. Now, in that other category, so this bubble over here is something different. So these are the companies they own 100%, and these are the companies they don't own 100%. So they also have a portfolio of public shares in public companies, and rather large amounts. So they own 13% of Kraft Heinz. They own 10% of, that's their breakdown. So 13% of their portfolio is Kraft Heinz. I think they own a quarter of Kraft and Heinz. They own like 20% of Bank of America. They own a very large chunk of Coca-Cola. Warren loves Coca-Cola, and American Express, and even Apple. They own like 5, 6, 7% of Apple. And so they own all of these companies, and they just buy them and sell them whenever they feel like. They're just like you. You have your portfolio of public companies. You might do it in a mutual fund. Warren and team, again, 30 people total, just decide one day that they really, this is old. A few months back, they decided that the airlines were not a good thing to own, and they sold all of them. So they sold, $3 billion of Southwest, $3 billion of Delta. It was probably down to 2 by then, and whatever they owned in American and the rest of the airlines. They just sold them all, and they own a lot of them. It's not like they can just go on Fidelity and put in a sell order, but they go to whatever, Goldman Sachs or whatever, and however they do their trades. And so part of their firm, part of the holding company, is these private firms they own, and part of it is the public. The reason why they have the split is because they started with the public trading. The original thing that Warren started was a company that traded public shares. And then it happened to buy this company called Berkshire Hathaway, which was a textile manufacturing, if I remember that right, in Massachusetts. And it went public. And so this thing went public because they owned a public company, and it turned into this behemoth. I happen to be knee deep in holding companies at the moment because I just started one, and it's Africa Eats, and I'm sure I've told you about this before. But for the people who are watching at home, the idea is that we have a venture capital fund called Fledge, right? Together we have one called Fledge, and we've invested in a whole bunch of different companies in Africa. Not all of them, but a lot of them are in food and ag. And so what we're doing is we've created a holding company to own those little minority stakes and to grow those minority stakes, because a few different reasons. But in terms of this lecture, what's really interesting is that as soon as you change your mindset from I want to own these companies for 10 years and get out to I want to own these companies forever. Like, I want to make the most out of the ownership of these companies. I want to make the most out of these companies. As soon as you change your ownership thoughts, you change what you do with your investment capital. You change the way you interact with these companies. So all of a sudden, instead of having separate conversations with each one of these, this is 27 companies. Let's just imagine it's like 27 hours or 52 hours a year talking to these companies to keep up with them. Well, all of a sudden now with the holding company model, we have an incentive for them to talk to each other because they're all part of one thing. We have an incentive for them to tell us what they can do together. And we suddenly have an incentive to invest in things that might help more than one company at a time. And so we think we can grow something that's worth much more by sticking them all together in the holding company and following some of the learnings from Berkshire Hathaway. So we're intending to make this a public holding company as soon as we can, 3-4 years from now. And I'm recording this, so we'll be able to look back in 2023, 2024 and see if we got there or not.